Welcome to the deep dive. Today, we're diving into the future of Bitcoin. We're going to be exploring what could lead to a Bitcoin supply shock. Basically, a situation where demand for Bitcoin, well, it totally outstrips the available supply, and that could potentially send the price, well, soaring. Our guide for this deep dive is a YouTube video by Swan Bitcoin. It's called MicroStrategy's Bold $42 billion Bitcoin Plan. It's a fascinating look at what's happening in the Bitcoin market right now.
Yeah, it really highlights some key trends that we're seeing, like big institutions getting into Bitcoin.
Yeah.
The scarcity is like built into Bitcoin's design and what all this could mean for the price.
Okay, so let's break this down. The video focuses on MicroStrategy's plan to raise $42 billion to buy even more Bitcoin. Now, that's a massive number. We're talking about the largest equity offering in history. What does a move like this tell us about how big players are viewing Bitcoin?
It's a strong signal that, some major institutions are starting to see Bitcoin as a long-term asset, not just some kind of speculative plaything. For them, this isn't about quick profits. It's about securing a position in what they believe could be the future of finance.
And it's even more interesting when you consider that they're making this move at a time when Bitcoin's price is already on the rise.
So they're doubling down on Bitcoin even as the price climbs.
Mm.
Okay, that says a lot about their conviction. But let's get into the specifics of this plan. MicroStrategy aims to buy about 570 Bitcoins every day for the next 3 years. Now, that might sound like a drop in the bucket, but here's where it gets really interesting. Over that same period, only about 492,000 new Bitcoin will be mined. That's the rate at which new Bitcoin are created, through a process called mining. So you're seeing the stage being set for a potential supply shock, right? Absolutely. You have to consider that MicroStrategy isn't the only one buying. There are also thousands of Bitcoin being bought every day by things called Bitcoin ETFs. These ETFs allow traditional investors to get exposure to Bitcoin without having to directly buy and hold it themselves. So when you add all this buying pressure together, it starts to look like demand is significantly outpacing the new supply entering the market.
And this brings us to something else the video highlights, the flippening of Coinbase. MicroStrategy's market cap, basically the total value of the company, actually overtook Coinbase, which is the biggest crypto exchange out there.
Yeah.
So what's the significance of this? What does this tell us about the direction the market might be heading in?
I think it's a symbolic shift. It shows that the market might be starting to place more value on companies that focus specifically on Bitcoin rather than those involved in, the broader crypto market. It's like the market is saying, hey, Bitcoin is the real deal here. And there are other examples of this happening too. Japan's MedApp Planet saw a massive increase in their market cap after implementing a Bitcoin-focused strategy. And we're even seeing similar rumblings in the traditional finance world. Microsoft is actually holding a shareholder vote on whether to adopt a Bitcoin strategy.
It's almost like a domino effect. One company makes a bold move with Bitcoin and others start to follow suit. And this institutional adoption, it seems to be driving the growth of Bitcoin ETFs. Did you know that these ETFs now hold over 1 million Bitcoin? That's almost 5% of all the Bitcoin that will ever exist.
That's right. And Matt Hogan, who is the CIO of Bitwise, one of the big players in Bitcoin ETFs, actually called it a tidal wave of institutional capital flowing into Bitcoin. He believes this represents the best risk-adjusted way to invest in Bitcoin. That's a pretty strong statement coming from someone in his position.
A tidal wave. It really does feel like that, doesn't it? The momentum is undeniable. And it's not just institutions, right? We're also seeing individuals making big bets on Bitcoin. The video mentions Howard Lutnick, the CEO of Cantor Fitzgerald, who has personally invested hundreds of millions of dollars in Bitcoin. He's on record saying that he believes Bitcoin will eventually be worth way, way, way higher than it is today.
Yeah, Lutnick is a great example of the type of high-conviction investors entering the Bitcoin market. These aren't folks who are chasing quick gains. They're buying Bitcoin because they fundamentally believe in its long-term value proposition. And every Bitcoin they buy is one less Bitcoin available for everyone else, which, further contributes to this potential supply shock. He's even arguing that Bitcoin should be viewed as a commodity, like gold, rather than a currency, because that framing might help avoid pushback from, regulators and politicians.
It's all about perception, isn't it? And right now, the narrative around Bitcoin seems to be shifting from a volatile digital currency to a scarce digital store of value. And to add another layer to this, we can't forget about what's happening with the Bitcoin hash rate. It recently reached an all-time high, which tells us that the Bitcoin network is more secure than ever before.
That's an important point, especially when you consider the increasing involvement of institutions and potentially even nation states. In the Bitcoin world, a high hash rate means the network is more resistant to attacks, which is something that these larger players are going to prioritize.
Hold on, wait a minute. Nation states mining Bitcoin. Now
Yeah.
that sounds like something out of a spy movie.
Well, it might sound far-fetched, but there are some pretty compelling hints out there. Did you hear about the Argentina Central Bank's art exhibit? It featured active Bitcoin mining equipment. That raised a lot of eyebrows. And David Bailey, who's a leading voice in the crypto space, actually predicts that we're going to see nations moving from small-scale Bitcoin mining pilot programs to operations on a massive scale, potentially using gigawatts of power.
Wow. So we're talking about institutions jumping in, ETFs scooping up Bitcoin, individuals with deep pockets betting big, and now potentially even nation states getting involved in mining. That's a lot to process.
It is, and it's all happening against the backdrop of Bitcoin's limited supply. Only 21 million Bitcoin will ever exist. That's it. So when you have all this demand converging on a fixed supply, things are bound to get interesting.
That's the perfect cliffhanger for part one of our deep dive into the potential for a Bitcoin supply shock. Join us for part two, where we'll unpack the potential implications of this and what it could mean for the future of finance.
Welcome back to our deep dive into the potential for a Bitcoin supply shock. I don't know about you, but I'm still processing that whole nation-state mining idea. But let's shift gears for a moment and zoom out to the bigger picture. We've been talking about all these forces converging on Bitcoin, institutional buying, the limited supply, these high-conviction investors. It really does seem like a perfect storm is brewing.
It does, doesn't it? And the potential implications of this supply shock, they're pretty significant. Remember, Bitcoin has a fixed supply of 21 million coin. That's all there will ever be. Imagine if there were only $21 million in the entire world. Suddenly that scarcity creates a whole new level of value, right? That limited supply is one of the fundamental things that makes Bitcoin so intriguing. But how does that play into this whole supply shock scenario? Can you break that down for me?
Sure. Think of it this way. As more and more institutions and individuals decide they want a piece of Bitcoin, the demand increases. But because the supply is fixed, that increased demand puts upward pressure on the price. It's like a game of musical chairs where the music never stops, but the number of chairs keeps shrinking.
Okay, so it's classic supply and demand, but with a digital twist. But we've seen Bitcoin's price fluctuate quite a bit in the past. What makes this time feel different? What makes people think this upward pressure could be sustained?
You're right. Bitcoin has always been known for its volatility. But what we're seeing now is a confluence of factors that haven't been present before. The scale of institutional adoption is unlike anything we've seen in the past. The emergence of Bitcoin ETFs has made it easier than ever for traditional investors to get involved. And the narrative around Bitcoin, as we were talking about earlier, is shifting from a speculative asset to a long-term store of value.
So you're saying that these factors combined are creating a more sustained and potentially even exponential demand for Bitcoin.
Exactly. And as that demand continues to outstrip the available supply, the price could rise dramatically. Some analysts are even predicting that we could see Bitcoin reach six-figure or even higher in the coming years.
Wow, that's a pretty bold prediction. But even if the price does go up that much, what's it actually mean for the average person? Let's say you bought some Bitcoin today. What could you potentially see happening to your investment?
Well, for those who already hold Bitcoin, it could mean significant wealth appreciation. Imagine if you had bought Bitcoin a few years ago, when it was a fraction of the price it is today. Your investment would have grown exponentially. But it also raises some important questions about accessibility. As the price increases, it becomes more difficult for people with limited resources to enter the market.
So there's a potential downside to this whole supply shock scenario. It's not all sunshine and rainbows.
There's always a flip side to any major economic shift. And the potential for increased wealth inequality is definitely a concern. It's something that policymakers and regulators will need to grapple with as Bitcoin becomes more mainstream.
It's almost like we're witnessing the birth of a new financial system, but the rule book is still being written. That's both exciting and a little bit daunting, wouldn't you say?
Absolutely. We're in uncharted territory here. But that's what makes this whole space so captivating. We're seeing the emergence of a new asset class, one that challenges traditional notions of finance and could have a profound impact on the global economy.
It's a paradigm shift for sure, and it's unfolding right in front of our eyes. But if we zoom out even further, what does this all mean for the future of money itself?
That's the million-dollar question, isn't it? And it's one that we'll need to continue exploring. As Bitcoin evolves, some believe that Bitcoin could eventually become a dominant form of global currency. Others see it more as a digital gold, a store of value that exists outside the control of governments and central banks.
It's fascinating to think about the possibilities, isn't it? Bitcoin as a global currency, a digital gold, it feels like we're living in a science fiction novel.
It does, doesn't it?
Yeah.
And I think it's important to remember that this is still a relatively new technology. We're only just beginning to understand its full potential.
So
Buckle up, because things are about to get even wilder.
let's just say the future of money is likely to be very different from what we're used to. And Bitcoin is at the forefront of that change.
Well, that's certainly something to think about. We'll be back for part 3 of this deep dive, where we'll explore some of the other forces at play in the Bitcoin ecosystem and what it all means for you.
Welcome back to the final part of our deep dive into the potential for a Bitcoin supply shock. We've covered a lot of ground, from institutional adoption to the limited supply, even that mind-boggling idea of nation-states secretly mining Bitcoin. But before we wrap things up, I think it's important to acknowledge that not everyone agrees with this whole supply shock narrative, right?
Yeah, you're absolutely right. There are always different perspectives, and it's healthy to consider the counter-arguments. Not everyone is convinced that this upward trend in Bitcoin's price is, here to stay.
So what are some of the arguments against this whole supply shock idea? What are the skeptics saying?
Well, some skeptics argue that the current price increases are just another Bitcoin bubble, destined to burst like those we've seen in the past. They point to the fact that cryptocurrencies, they've always been volatile, and that governments could step in with regulations that could dampen enthusiasm for Bitcoin.
So they're saying it's all just hype and speculation, that maybe this time isn't really that different.
To some extent, yes. They believe that the current frenzy is driven by, FOMO, fear of missing out, rather than a fundamental shift in the value of Bitcoin. They also point to the fact that Bitcoin's price is still heavily influenced by, news and sentiment, which makes it susceptible to manipulation. Think about how a single tweet from a prominent figure can send the price soaring or plummeting. That kind of volatility makes some people nervous.
Okay, I can see how that would be a concern. But what about all those long-term investors we talked about earlier, the ones who are accumulating Bitcoin and holding it for the long haul? Doesn't that suggest a more fundamental belief in its value?
That's a great point, and it's where the debate gets really interesting. You see, the whole supply shock argument hinges on the assumption that these long-term holders, the so-called Bitcoin whales, will continue to hoard their Bitcoin, essentially taking it out of circulation.
So if those whales start selling, the whole supply shock narrative falls apart?
Exactly. If a large number of Bitcoin holders decide to cash in on their gains, it could flood the market with supply and potentially lead to a price crash. Remember, just like fear of missing out can drive the price up, fear of losing everything can set it crashing down.
So it's a bit of a gamble then, betting on the psychology of the market and the behavior of these large holders.
In a way, yes. There's no guarantee that the current trend will continue. Bitcoin is still a relatively young asset, and its future is uncertain. It's important to remember that this is a new frontier, and with any new frontier comes a certain level of risk.
That's the nature of any emerging technology, I suppose. It's a bit of a wild west out there. But even with the risks, you can't deny the excitement surrounding Bitcoin. It really does feel like something significant is happening.
There's definitely a sense of momentum building. And regardless of whether you buy into this whole supply shock narrative or not, Bitcoin has already proven its potential to disrupt traditional financial systems. It's a force to be reckoned with.
It's a fascinating experiment, that's for sure. And it's one that we'll all be watching closely in the years to come. So as we wrap up this deep dive, what's the key takeaway you want to leave our listeners with? What should they be thinking about as they navigate this complex and rapidly evolving landscape?
I think the most important thing is to stay informed and to approach Bitcoin with a critical and discerning eye. Do your own research, understand the risks involved, and don't invest more than you can afford to lose. It's an exciting space, but it's important to approach it with a healthy dose of caution.
That's excellent advice. And remember, this is just the beginning of the story. The future of Bitcoin is still being written, so stay curious, keep exploring, and who knows, maybe you'll be part of shaping what comes next. Thanks for joining us on this deep dive into the world of Bitcoin and the potential for a supply shock. Until next time, keep diving deep.